AXA says, I have a question on gold. Based on the outlook and how the market's performing, is anyone still putting their funds in GLD, which is the gold ETF? Alternatively, is it now recommended to sell gold and maybe roll some of that into cryptocurrency? Of course, for me, the crypto investment for my personal risk tolerance is that 5 to 15% profile target, and I continue to dollar cost average. What's everyone's perspective on gold? Robert, you want to kick this one off?
Sure. I love precious metals. I own gold. I own silver. I've always been in it, at least for the last 15 years. For me, though, I don't know that you ever want to be all in one sector. So if you're looking at it as a hedge against inflation or as a diversification tactic, then I think you should own gold. I have no problem with that. The way I look at it is, do I believe that cryptocurrency is going to outperform gold in the coming years? Absolutely. But that doesn't mean you should be all in one sector or one investment. You want to make sure you keep your diversity, and I think gold and silver is a good way to do that. But I even believe silver will outperform gold over the next 2 or 3 years. That's just my opinion. But if you look at gold right now, the price of it as we film is $2,621 an ounce. I think we'll see a $3,000 gold ounce price in the next 2 years. So there is a decent amount of return there, but I don't know if I would sell it and get all in on crypto. Just make sure you keep it where we talk about where you have the right amount of allocation in every sector. That would be my opinion.
Yeah, I think this is a great segue, Robert, and I want us to talk about this for a little bit, of this idea of chasing the next best thing, right? So AXA A says, hey, I've got this GLD, and GLD, by the way, is up 35% over the last year. It's up 26% this year. I mean, it's kept up with S&P 500. It's done very well. Gold has done very well this year. So he's saying, hey, I've got this gold. Do I keep the gold for a long time, which is like part of his original investment thesis, is I wanted to have some gold in my portfolio, or do I now sell gold for this shiny new thing over here like Bitcoin? So do I, sell this to go chase this? And then maybe so I just want to take a step back here for a second. There's always going to be a shiny new thing that's going to outperform whatever your existing investments have, right? We cannot always perfectly buy, perfectly sell, perfectly move. I mean, it doesn't exist. The quicker every single one of you realize that you're not ever going to perfectly predict and optimize your portfolio at the most perfect times in the world to make the most money possible, the more wealthy you're going to be, because that means you're going to stop trying to do that. Now, let's say, for example, Robert, that AXA took his gold investment of $10,000, which is up 25% this year, and he took that, he sold it today, and he put it in Bitcoin. And then let's say something happened and gold went up another 10% over the next month while Bitcoin chopped sideways. Well, dang, that's an opportunity cost of 10%. Maybe I should move it back into gold, right? And so then he pays the 3% trading fee on Bitcoin and then moves it back into gold, and then Bitcoin skyrockets, and then gold's flat again. Then he moves it back again, right? That's what you don't want to do. We don't want to see anyone juggling, trading back and forth, trying to time the market one side or another. If you're bullish on gold, like Robert and I are over the long term, have some gold. If you're bullish on Bitcoin, like Robert and I are over the long term, have some Bitcoin. Don't try and do this time the market stuff, because it's only going to leave you chasing, paying high trading fees, and underperforming if you just had an idea and stuck with it for a long time.
I love that. And, the way I look at it right now for myself, if I have $1,000 and I want to invest it and I'm choosing between gold and Bitcoin, I'm probably going to do $700 in Bitcoin and $300 in gold or precious metals, but I'm never going to chase. Because if I were chasing, then it would be a recipe for disaster, because contrary to what a lot of the fake gurus say, you want to have your safe blue chip investments, the VOOs, the QQQs of the world, that we know year in and year out, decade in and decade out, are going to make that 10, 11, 12% a year. And then you have your other buckets, which maybe can be a little more risk on and in the cryptos and in the precious metals and some of these other investment sectors. So just be careful. Don't chase the shiny ball, because at the end of the day, you have to have your different buckets of investments and have that diversity to make sure you have a well-rounded portfolio.
It just goes back to this idea that Robert and I really try and drill into everyone here, which is, before you invest any amount of money into anything, have an investment thesis. Why are you investing in this asset? Is it because you think their earnings are going to go up? Is it because you believe in AI? Is it because you think their cash flow is going up, right? Have a thesis as to why you're going to invest in this, and then say, as the price moves up or down, how is my thesis doing, right? We're up 30%. oh, cool, seems like my thesis is still playing out, or, we're down. Am I doing something wrong? Right? Just like have a good thesis as to why you buy and allocate capital into something. And the only reason you should sell that is to one, rebalance your portfolio, which happens a lot. I do that quarterly, semi annually. But also, two, if your investment thesis is broken. If you invested in gold and the reason you invested in gold was because you thought ABCXYZ is going to happen, but something else happened instead and the price is not doing what you want, then yeah, sell your gold investment. That's totally fine. But if you bought it and then you're over here seeing, oh, something else goes up more, I should go put like, that's not investing. That's gambling. That's timing the market. And historically speaking and statistically speaking, that's how you lose money.